In today's video, we're going to be ranking the best and worst life insurance companies for infinite banking. And my quick disclaimer is this is just for educational purposes only. Obviously, we're going through 18 companies, and there's a lot of different factors that we're going to look at. Both Dom and I are going to be going through this, and we've not shared notes, and we might have some arguments going back and forth as we figure it out live together. Let's dive in. Anything that you want to say before we jump into this?
I do not have anything specific to say. I did a video like this once upon a time, probably like 3 or 4 years ago, and it was just ranking the top 10. And so some of these were on there, some of them were not. So it'll be interesting to see if, I don't even remember them fully, if they have changed or aligned over the last couple of years. But stuff like this gets me excited because I love shaking up the pot.
Yes, that makes 1 out of the 2 of us. The other thing I want to just say is the format, and you may have seen this on YouTube, where you have like S tier, A tier, B, C, and D. What I'm being told is C is like average, and then B is above average, A is like really good, and then S is like phenomenal, and then D is below average, okay? So that is... for you non-millennials or Gen Zers watching this, I'm just letting you know, like that's we're literally just using what a lot of people have used on the internet for ranking. I still don't fully get the words or the letter breakdowns, but that's how it is. And the red and orange and yellow are better than the green and the green D and the green C. So just laying that out. And the other thing, Dom, is we've not shared notes. I don't even have notes on this one. So we're just going to go through this live. We'll probably argue, and we'll see how it all figures itself out. So without further ado, let's jump to company number 1. And remember,
Caleb, can you...
what, go on?
Oh, go ahead. Nope, I was just going to say that. Tell them the prompt so we know specifically what we're ranking for.
The prompt is we're ranking for the best and worst life insurance companies for infinite banking, okay? So we're talking about if you want to overfund life insurance and then utilize that capital borrowing against to buy other assets, that's what we're looking for. Now, when we're using the word infinite banking, we're also going to acknowledge what the Institute and others talk about when it comes to whole life, IUL as well. And so there's some companies on here that are IUL carriers, and they will get ranked worse than carriers that are whole life just because of that. But hopefully we'll acknowledge the pros and cons. I don't think I'm going to give any S tier to IUL carriers. So maybe you will, but that will be a thing that we can hash out. So all that to say, let's go with number 1, and number 1 is Allianz. And Dom, where would you rank Allianz on a scale of S, A, B, C, or D, and why?
Yeah, great question. So because Allianz is a solid just insurance company in general, I know that's not necessarily what we're ranking for, but ranking for IBC, et cetera, I think you at least have to acknowledge like the financial ratings, great company, been around for a while. So I would say that they have all the backing behind it from that perspective. But because they are essentially known for IUL, non-participating, like they essentially have a structure that doesn't even offer whole life in the way that makes a lot of sense. We're going to go with a C for sure.
Okay, so do we know if I know that they have I believe Allianz is a mutual company, but they just have an IUL. They have a solid Comdex score, but I will also rate them as a C because I think they've got some you can create a solid IUL company or contract with them. I do know that we have some friends that are really bullish on Allianz and max funding, and they would say that you could even use them for infinite banking, but I will put them in the C category as well. So hey, look at that. We're agreeing. 1 out of 18. Here we go. All right. So next company is Penn Mutual, and they have an IUL and a whole life, and they have, I think, competitive products on both ends. They're a phenomenal mutual carrier. An episode that has not dropped yet, or at the time of us recording, but I sat down with Tom Gober, who's like a super smart when it comes to like ranking companies and like their strength and are they doing anything sketchy. And he's like, Penn Mutual is as solid as they come. And so because they have a solid product, because they have a really flexible PUA rider, because you can overfund, because their portal's very, very clean. I mean, my latest life insurance policy on myself was with Penn Mutual. The policy that I did on my daughter is on Penn Mutual. For that reason, I'm going to make it an S tier for all the reasons that I put. Dom, curious to hear your take on that.
Caleb, you retracted your statement. You said, I'm not going to give any S tiers to any IUL companies. That was your beginning statement. And then here we are.
I knew that the reason I said that they have whole life and IUL because I knew that you were gonna pull that on me. And I will correct my statement if I need to, if it wasn't clear. If you only do IUL and don't do whole life, then it's going to be a hard ranking. Most of these carriers, maybe unlike, there's some that just do whole life, but even Lafayette Life, which we'll get to, they're owned by a company that has an IUL carrier. So all that to say, good one. But that's why I opened the way I did.
Amazing.
I was ready for you because you're so predictable.
I love being predictable. Nothing better than that. Amazing. So let's go ahead and share around Penn Mutual for myself. I believe that technically no insurance company, from everything that I know, they always have something that I wish would just be slightly different, right? And so like if I had to like think of this, I do think Penn Mutual is at the very top tier for having to rank. It almost makes me feel like I want to put them between the S and the A just because like there's some things that I just 1 or 2% differences that they would make as a company. But with this sheer model, you know, you have to go between S and A. I would put them in an S tier as well for all the things that you said.
Yeah, probably the two things, if I could, you know, be critical on Penn, is number one, you can't really do front loads. They have a really strong PDF, premium deposit fund, that you can use to front load, but it's not the same. So I wish they did that. And then taking big time loans, I wish that they made it easier to do via their portal. Obviously you could do small loans through their portal, but that's something that I think, don't take my word for it, but I think that's something that they're working on to make it easier to take bigger loans from their amazing portal. So those would be like, they get those two things. I think they even solidify more in the S tier, but they're S tier for, sounds like both of us. All right. Next company is Ameritas. It's either Ameritas or Ameritas. I think it's Ameritas. We've done a couple of videos on them. I've actually had a great conversation with one of their top executives, and I might be doing an interview with one of their top executives. They're a great company. They embrace infinite banking. They can do strong product designs, and so I'm going to put them in B, and remember, B is above average. I'm going to put them in B mainly because when it comes to what I'm seeing so far, when it comes to like the carriers that I would almost compare them to, there are, you know, there's a couple differences, especially when it comes to how they illustrate their PUA flexibility. But really, they could also go in the A tier especially if you want some exceptions when it comes to underwriting. And I like the fact that they embrace the strategy so much. So as I'm talking, Dom, I kind of want to put them in A tier. I'm curious where your thoughts are, but I'm changing it to A tier. But I could obviously be swayed to B depending on what you say.
Amazing. I could agree with you, but I would put them in a B tier. And here's why. If you were to compare them versus some other companies that I'm going to put in the A tier, I don't think that they essentially hold the candlestick to the same level. But I do think for IBC specifically, they are a really good company within that one context. Their Comdex score is only an 83. And so I don't necessarily like to work with companies below 90, like for just like long-term financial stability. So their financials and the size of their company aren't necessarily as strong as some of the other ones. And then on top of that, if you just look at some of the policy performances when you're comparing and running illustrations, it's not most ideal when it comes to like cash value growth.
Yeah, well said. I do think the Comdex score is something that when I do get one of their executives on, is something that I'm going to ask them about and see their take. And I think there are reasons for there's different ratings, give different things. But yeah, that that I think puts them in above average at B, but not in the A. So let's put them back in B. Okay, let's look at John Hancock. Full disclosure, I just went to a John Hancock event, and one of our servicing team members went to a separate event on servicing at John Hancock. They're doing some really cool things on the health side. So if this was not talking about infinite banking, we're talking about like companies that are innovating on helping you live longer, they would be in the S tier. But they're a stock company that doesn't have a whole life product that they offer, and for those two reasons, they're going to go in the D category. Remember the prompt though; they're a good company, but they're a stock company. They have IUL, and I don't even think they would want infinite banking. I don't think they would want anything to do with it, and so for that reason, I'm putting them at D.
Yeah, this along one of the other companies that are on this list are companies that are always at some of the big producer groups sponsoring. Great company, great household name. We even have a John Hancock policy on our books as well. But yeah, they are a stock company. And so the ideation of putting it for infinite banking, et cetera, is not ideal, but you can create a pretty solid, I think, IUL policy and kind of produce the IUL format that we'd want if you wanted to think of it that way. And so for that, I put them in the C category just because they have a lot of strong validity to them as a company.
So you said C or D?
C.
Oof. All right. Well, how are we going to decide this? Because
you could leave it. I mean,
let's leave it in the D. Let's leave it in the D.
Yeah, unless I'm like so strong of like, man, that's a terrible rating, Caleb. Like you should then we can fight for it. But like, I think you could argue a D, but because they're a really solid company and you could technically overfund, an IUL, you could still do infinite banking.
Yeah, let's put them in the C because I just looked at a couple other companies on this list that are going to go in D. So let's put them in the C.
I'm like, I see the same thing. I'm like,
I'm like, okay, they're going to go in the D for sure. Okay, so let's put them, John Hancock in the C. All right, next company is Security Mutual. We did a whole video, Alden and I, breaking down Security Mutual for infinite banking. Short answer is they are very much embracing of the strategy. They love infinite banking. Little worried though about how much of their assets and their book of business is actually tied in outstanding loans. And when we want to talk about ratings, they don't have the highest ratings. I would put them very much in the same category as Ameritas. And I believe they even have a C- rating on WISIS. Now, I do believe that they rank companies difficult, so that's like, I think that might be average for them. But anytime you see like a B- or a C, that doesn't necessarily make you feel super good. And they're also not a massive company, which is fine. Like the benefit is they'll take your call, like great customer service. But one of the reasons if I work with an insurance company, I want to remove risk and I want to feel really, really good where I'm shifting my risk with a company that's like can weather major storms. And for that reason, I put them above average because they have a great whole life product, although their internal rate of return and projections on their whole life is not really competitive. But if you're a purist, you don't care about illustrations at this point. But then the other talking point is like, if you don't care about illustrations, then the other talking point should be, I want a company that really, really is rock solid when it comes to ratings. And if you can't win the illustration game or like the solid rating game, I think that's why you end up in the B tier. But they're B and not C because they have a whole life product and they embrace infinite banking. And I do believe they mean extremely well. So that's why I put them there.
Yeah, I would agree with the B category. They constantly are representations of the infinite banking symposiums. And so just from the idea of like, they want infinite banking business, they push the infinite banking concept. A lot of companies don't even like that ideation of using that terminology. And so they design products specifically for that idea and concept. I would definitely put them in the B. But for some of the other reasons that you said, it doesn't necessarily like make me like the most excited of like, you know what, like I want to have my policy specifically with them, or we want to essentially promote that and work with them on our book of business on like a consistent basis. Just because they're IBC heavy and focused doesn't necessarily mean that, in my opinion, that they're best. Someone can say like IBC, you should always do 40/60, but that doesn't necessarily mean that it's the best. So for that reason, I think a B is a good spot for them.
Cool. All right, where do you put Foresters, Dom?
Uh, Foresters is definitely an A tier company.
That's very
They
strong.
have,
It's a very
yep,
strong
they,
answer from Don Rufren right there.
yeah. From everything that I've seen from Foresters, with the way that you can design um, the product in itself, just like being specific for whole life. I know they're not technically mutual, but they participate like they're a mutual company, and so the dividends are very strong. And I've never seen a policy with Foresters where I'm like, you know what, this draws a red flag, right? Um, I personally, because I've never actually had access to Foresters of like going deep into illustrations and
Hmm.
some of that other stuff. From everything that I just know from people that are in the space that have been around a long time, looking at their financials, the policies that I've seen, they definitely get a strong rating from me from the things that I know.
Cool. So I'm leaning on AI. I also did this company with Alden, and what I like about the company is they are fraternal. You get some extra perks just being a fraternal company, and usually fraternal companies have even a greater incentive for financial strength. So that is something. Their Comdex score, according to Claude AI, is 85. But one of the reasons why it might be 85 is they're not rated by Moody's or Finch. So that could limit their Comdex score because they are AM Best excellent for the last 25 years. So there's nothing that in our research that was like, this is a red flag. Foresters is one of the go-to companies that MLM companies will use because they give lots of different flexibility on levels of payouts. And so it's interesting because I have seen people that have used Foresters and it's like the blind leading the blind kind of deal. And it has nothing to do with Foresters necessarily, but they are like Penn Mutual, for example, does not want anyone in an MLM or an IMO to represent their product. Like they just don't. They want like good financial professionals, and it's not easy to get a Penn Mutual contract. Whereas like Foresters, a lot easier. Now that can be a positive. Like congratulations. That can also be a negative. And so there's that. And then when it comes to their policy design, like illustration competitiveness, their IRRs are low fours, and so for that, I would put them in the B tier. But you were so solid about A tier that it's not a hill I'm willing to die on, but I would for sure put them like when I think of Ameritas, I think of like I would compete them with Foresters.
Yeah. And from a Comdex score, I do think that they are one of those companies that you can't actually pull and get an accurate Comdex score, just like there's other companies that just don't provide that. So I know what Claude said, but I don't know if that's accurate because you don't know exactly where they're pulling it from. So from a financial perspective, it would actually be interesting to know like what their super deep financials are. But again, I would put them like if I were a person to get a policy, I would rather have a Forester's policy than a Ameritas policy. And again, if you're like, yeah, I should put them in B, I wouldn't disagree with that either. But I definitely think they're
Let's
an A
keep them in
company.
A, but I think it's good for disclaimer. Also, just so you know, I mean, we've even disclosed like there's John Hancock can be a great company for certain reasons. We would be willing to get contracts with anyone with C and above, just to be clear, anyone with C and above. And there are reasons why certain companies might be way more advantageous. We're talking disability, if we're talking long-term care, embedded, like certain companies are going to thrive. So I'll also take this with a grain of salt. Now I'm gonna go to the next one, which is Progressive. I just want to point this out. Progressive is, and I know Joel, but I want to go Progressive now. Progressive is going to be a
Because he's very
D,
progressive.
because they don't have a whole life or IUL. They just do the property and casualty. So I don't know if there's any debate that needs to be had. I'm sure they do great commercials. I think, isn't it Flow? Is that Progressive? Let me
Yeah,
ask.
it is Flow. You're good.
Yeah.
It's Flow.
So
Yeah,
Flow, Progressive,
the lady.
one thing you always have to ask is like, how much money do these companies pay for ads? Like, it's like, hey, why don't you just make the product better? But it all works itself out, I guess. But yeah, anytime you're seeing a bunch of ads, you're like, okay, well, that money's got to come from somewhere. And so the Progressive goes in the D category, no hate. But if you don't have a whole life or IUL, like if you don't really have a permanent policy to begin with, you really shouldn't even be on this list. But they'll be a D for sure.
You've gotta put a D on this thing no matter what. That's kind of how this
For sure.
works. So
I
I
think there's
think
going to
it's
be a couple
good.
other Ds as I'm looking ahead. Okay. All right. Next one, I'll take this one as well. Pacific Life. Pac Life has actually been in the news recently for a couple things. They've had some lawsuits. They've had, some aggressive sales tactics, but they're also like the biggest IUL carrier, period. And they're a whole life company, or not whole life. They're not a whole life. They might be getting a whole life product, but they're a mutual company, and they have a very competitive IUL product. Even though they've had problems, I think you would have to acknowledge that they are doing some things well. And when you're the biggest, you're going to have people coming at you. So I'll put them at C because they don't have a whole life product, but they are mutual. They've been competitive, and I do think that they're going to figure their whole lawsuits things out, and so that's where I would put them. Again, they're not going to add a B and above for infinite banking if they don't have a product that really embraces this. Although there might be some people that would be willing to debate me and say you can for sure do infinite banking with IUL, and here's why Pacific Life would be really competitive, but we control this channel, so we get to say whatever we want. Dom, what are your thoughts on that?
We're good. You can see a lot of the carriers that are in the same tier sections. They're like very similar in nature. So you can see Allianz, John Hancock, Pac Life, like they're all competitors for each other, driving IUL business right now. And so like it's I think right now we're right on par for brand of like what each tier is. So no, I agree.
All right, Lafayette Life, Dom.
Now we're gonna get spicy. No, I'm just kidding. I need you to go first because I don't want to persuade you in any direction here.
Hey, I'm interrupting this video briefly to say, if you're serious about using whole life insurance for infinite banking, we have a free gift for you. It's called the IBC Company Guidebook, and it gives you inside access to the data behind these videos. Things like life insurance company Comdex scores, their dividend performance, how they approach infinite banking style policy designs. It's all the information we cover in these videos organized in one place for easy reference. To access the guidebook, click the link in the description or pinned comment. Now let's get back to the video.
I would either give them an S or an A tier. They do amazing front loads, financially very strong, non-direct recognition company, PUA pretty flexible. Wish they had a better client portal in some cases. They're a mutual holding company, so I think if we really wanted to pick them apart, that would be like one thing that you just have to keep an eye on, because they have no red flags as of right now. And speaking of Tom Gober, like this Lafayette was one of them. He's like, they're super solid, and you got to keep an eye on them because there are more areas that they could move. But almost every company could be that way in a sense. So you got to keep an eye on them. So I'd either put them in the S or A tier.
Well, you got to pick one.
I'll put them in the S tier, but I have a feeling you're going to say A tier. So we will we'll see what I really could go across the board. Both A and S are phenomenal, and B is above average. So I'm open for what your thoughts are.
Amazing. So I would put Lafayette in the A tier. And if you actually go back and look at my last video when I rated them on a 1 to 10, they were actually the company that was number 2 on that list. And so the idea of putting them in the S tier for infinite banking specifically could easily be argued. But here's the reasons why I don't think that they are currently the S tier and why I think that they should belong in the A tier. Is that they are very IBC focused. They like the IBC business, and they have one of the sexiest designs, period, when it comes to front loading. And, to be able to get 92+% cash value in the first year and then be able to start getting more than what you're putting in, not from a break even, but just sheer dollar in, dollar out within like year 2, it's pretty phenomenal on what they're able to do there. Now, if you start to look at some of their traditional, what we call cash flow strategies, where you're putting in a ongoing payment going forth, it's not necessarily as competitive as maybe like a company like Penn Mutual, et cetera. But that's okay. Like they're still very strong. The reasons why, excluding the things that I said, because the things that I said actually put them more in the S tier, but the things that put them, in my opinion, more of the A tier is that their death benefit is really weak relative to some of these companies when it comes to just sheer death benefit, even on designing it for cash value. And I value the death benefit even for an IBC concept. And so even though cash value is high, the death benefit's extremely low. They have this term rider as well that I'm not a huge fan of, that is just like a sheer expense. And then essentially when you do a front load as well, it drops off and makes a death benefit drop off pretty drastically as well. And so it gives us a false sense of how much death benefit you have, hard for planning as well in the, let's say, first 7 to 10 years. And traditionally, even though they are non-direct recognition, which has its benefits, their loan rates are usually on the typical higher end, especially as of late. And so because their loan rates are a little bit higher, their death benefit's not as strong, and their underwriting is not necessarily the strongest either, which prevents some people from getting through or getting some of the best ratings. I would put them in an A because of that.
Yeah, I mean, I could see both. We can put them at an A. I think they're for the most part very, very solid company. We do a lot of business with them for lots of the reasons why I mentioned. And I have a policy with Lafayette and think all the things that you mentioned are super, super valid. And so, yeah, they're either going to go in S or A tier. So I'm good with that. Okay. Next company is MetLife, and I'm going to put them in the D category. They're a stock company. I have some insider information that says they are financially not doing great, and I would not recommend people do business with Met. If you have a MetLife policy, you can reach out if you want more info, and I can maybe put you in touch with some things. I don't actually see much MetLife now, but it is something that if you have a MetLife, you're hoping to do infinite banking, it's definitely worth looking at what type of policy you have.
Yeah, I would put it in D. And the main reason as well is they're not even a company that actually does insurance really anymore. They've actually spun off into Brighthouse, I think in 2017. So like they may be like quote unquote the mother company that holds it, but there's a separate company that does Brighthouse that does that. And they're also more focused on even the annuity side of the business. So for infinite banking, et cetera, I mean, they can't even be put in the category because of that.
Yep. Dom, Ohio National, what are your thoughts on Ohio National?
Once upon a time, they would have been an A company for sure. But before they demutualized and kind of, did their watered down dividend and kind of did their whole thing, it even just puts a bad taste in your mouth to put them anything higher than a C. So it's like you either go C or you go D. But because of their because they have a whole life policy and product still at this point in time, I'll put them in the C category. I mean, I want to put them in the D.
They have a whole life product with zero dividend. Like they've essentially given the middle finger to future policyholders.
But they still have technically a whole life. And so if you were to look at, let's just say, one of these other companies in the C, that's like
MetLife, I would imagine. Let's see. It is. I mean, just because they have like, and by the way, we're using Ohio National, but they're now Augusta stock. Like,
yeah. I just so you know, like
have a whole life policy with Ohio National. If you already have it and you're built-in guarantees and there's some loan feature, yeah, for sure. You could be C. We could put it at the C. Going forward, though, it's for sure a D when it comes to I would much rather have someone have something with Pac Life, John Hancock, or Allianz versus Ohio. It's like not even on the same planet. If I had to compare, if you had to like roll a dice, and depending on what the dice lands, you roll with that company, I would be devastated if it clicked on Ohio National for future policy.
Just so you know, like you saw how hard it was for me to make that decision at the end. So if you're super strong with the D, like I could get I could get 100% on board with the D. So I'm definitely not like flying
I
on that
also will
sword by
just
no
say,
means.
going back to the Lafayette Life, I think what's tricky is the reason I think they should be in the S tier for infinite banking, but they would be in the A tier for whole life, is for all the reasons that you mentioned. I mean, you did mention like loan rates and all the things, but I also think it's tricky when you're looking at like insurance companies to like there are. I'm curious what you're gonna say for Guardian, Mass, New York Life, because they're like really, really solid companies, but I would much rather work with a company like Foresters or Lafayette Life in some cases than them. So we'll see. But with that, who did I ask you about Ohio National, or did you? I
I
asked
think
you.
we
So
agreed that
let's put
they're now
Ohio
a
National
D.
in D. I feel very.
Yeah, they're
I'm
now D.
overriding there, and we're gonna put them in D. Okay, let's talk about Guardian. And this is another one that literally could be an S or A tier. I Guardian is so big that in a lot of cases, sometimes it's like, hey, like, do we matter to you? Because we're they're just so big, and so like with any big company, there's some weird things that happen. We won't even get into the details. There's some weird things that have happened just like on our relationship with them that is just interesting. But if I put those things aside and I say, okay, they're super solid. They don't embrace infinite banking like to the T, but you can hyper overfund a whole life product. They're direct recognition, but their loan rates seem to be very competitive. They have a great portal. I mean, I compare them very closely to Lafayette Life, and I was going to put Lafayette Life in the S tier, so I'd put them in the S tier. So I'm curious where your thoughts are. Probably would put them in the same tier that I would put Mass Mutual, and Mass has, a pretty scathing, like, don't do infinite banking, blah, 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 but they still have some
we'll soon find out.
products. So
we'll soon find out.
So I probably
keep
put them in the A
staying
category
tuned.
for those reasons, but I also don't like one company, i.e., Penn Mutual, being the only S tier. So I'm torn here, and so
Cool.
I think I would put them in the Guardian in the S tier, but I want to hear your thoughts.
Amazing. So once upon a time when I did that video of ranking, they were number 3 on the list at the time. We didn't write nearly as much business then with them as we do now. We do write more. We have written more business. We have more experience with them. And with everything that I know about them now today, I would put them in the S tier. Again, large company, strong financials. They have the absolute most flexible PUA like possible. And so it makes it extremely sexy and attractive for the infinite banking concept. They also can design a policy. They're the only company on this list that can design a policy that can match something like a Lafayette Life in a front load perspective. And so it just gives the ability to just have like any type of design that you want as well. And their death benefit is a lot stronger than potentially like a Lafayette Life if you're like adding that piece into it, which for infinite banking concept, I do consider that as part of the equation, just not necessarily like the only equation. Their loan rate is lower right now than Lafayette Life's as well, and they are a direct recognition company. But with 10 years afterwards, you can actually change it to a non-direct recognition company, which creates a lot more flexibility with how you want your policy design in for the future as well. So for everything that I know about Guardian today, I definitely put them in the S tier. So yeah, there you go.
Yeah, no, I think that's well said, and I agree with that. Okay, let's see where Mutual of Omaha lands up.
Mutual of Omaha, isn't that the guy Curtis Ray? That's his company that he specializes in
favorite
for MTL
IUL peddler, Curtis Ray.
And so just because of like I've seen their company, like their IUL illustrations, etc. Like I put them in the same category as the other ones at the C company list. Their IUL is very strong. So technically, if you wanted to quote unquote overfunded IUL, max funded, whatever you want to call it, you could probably try and pull it off with that. But that's obviously not what the infinite bank concept is designed for. So,
yep, I agree. No more needed to be said about that. Okay, New York Life. Man, I have all the hard ones here. I'm gonna put New York Life B. They're a crazy, amazing, great company from a solid standpoint. Like you're not gonna get stronger. Just when it comes to infinite banking, I don't know if they would be the carrier or the go-to carrier that I would go for. They even have some strict guidelines as it relates to who can write with them, how much premium if you're not a career. But I mean they could also go on an S tier depending on who you're talking to. So curious your thoughts, Dom, on where New York Life should be.
So this is one company that I wish I knew a little bit more about, maybe from a standpoint of like flexibility, loan rates, things like that. Maybe so I could give like better example. I know if Alden was here, he could probably give a whole lot better, just insight. But my initial gut actually originally went to an S tier originally, right? I know then you put it into a B, so I'm like, well, maybe I should just play the happy middle and go to the A tier. The reason why they're the big four, right? So they're obviously the Mass Mutuals, the Guardian, the New York Life, the Northwestern Mutual. So like financially, like they are just a rock star company from that perspective. They are a non-direct recognition company as well. I have seen designs from them. And I've actually seen some of them like be very competitive when it comes to death benefit and cash value against like Penn Mutual. And so from those perspectives, I've never really heard anything bad from New York Life, knowing that they are a great carrier. And so like if I had more, and always in the past when I have looked at loan rates, when I was more maybe in the weeds, their loan rates really were competitive with other carriers as well, like a Mass or a Penn as well. So because I don't know enough about their PUA flexibility and some of those other things and like what their maybe loan rates are active there now, I'm going off past history. Because of all of that, I would put them in the A, even though my initial gut was like maybe they would be a good S company.
Yeah, let's put them in the A. I'm curious because my conversation with Alden was so long ago with New York Life. I'm trying to think what
they have a really attractive PDF strategy as well, which essentially is like you take a large lump of money, putting it in a side account, and that side account funds the rest of the policy.
Okay, so
they're giving like a 10 to 15% interest on the first year on that PDF account, which was also like
but that was just as like a promo.
Yeah, it's a bait to get you to bring money in for sure. But like
certain time, like so it's not all. So so in the considerations for what Alden talked about is their PUA flexibility is very inflexible PUA options with no catch-up provision. That's
not great.
That's not great. And when I think of IBC, I think of I think of that's a big deal. But they're really great. You're not going to get a more solid company. And so I do think the A tier is where they are, but like if I'm being honest, if someone was gonna put like there's a world where I would recommend Ameritas or Security Mutual before a company like New York Life for those reasons. Because if you're like embracing infinite banking, so that's where this is a tough experiment, kind of going back and forth. So that's
no. Like I said, that's why I had a hard time ranking them specifically with this one, because they are part of the conversation consistently, but I don't know enough about them from an in the weed perspective. And if what you're saying is true, I would agree with you. Like getting context on who the person is and their goals, if they need some type of flexibility, potentially catch up provision, like some of those other things are crucial to the IBC concept, in my opinion, which you could then argue that it could go in the B for sure. But because of the company, the size, the reputation, the product that they have designed for, cash value, like A or B is definitely, I think, a pretty solid place. So I'm cool with leaving them here at A, but I could see the argument for B as well.
Cool. Okay, now let's go to Mass Mutual.
So if you actually were to just like on front facing think about Mass Mutual, you'd want to put them in the S tier because of the size of the company, their name. I have my personal policy with Mass Mutual, and so I'm very familiar with it as well. And they're just great in a lot of instances. The things that have kind of pivoted my mind as of late from going from S tier to probably A tier. The reason why you probably want to put it in the C tier for if you're promoting it for infinite banking is Mass Mutual is very prominent for saying we don't want infinite banking at all. They make that very heavy across the board. They do it in memos, so on and so forth. But for what I know, if you're not promoting it for IBC and you're going sheerly off of like company size, design, loan rates, non-direct versus direct, like all those other factors, I want to put them in between A and B. But if we're putting New York Life in A, we have to put Mass Mutual in A. So that's kind of the problem that I'm coming up with. So if we were to move New York Life to B, then Mass could potentially go to B. But I do think Mass Mutual is a lot better company than New York Life when it comes to this. Their PUA riders, unfortunately, are one of the most inflexible PUA riders as well. They have a great catch-up provision, and their cash value up front is extremely competitive and attractive, especially with certain products like their HEC fee in certain instances. So there's a lot of companies who do like premium finance with them, which isn't the strategy for like IBC, but it is like a higher early cash value, process. So yeah, again, I think New York Life and Mass Mutual are some of the most debatable and hardest to rate because is it whole life or is it IBC? I know we said IBC, but like you could make a good use case for it. So I would put them in A overall for all the things that I said.
Yep. Well said. Yeah. Limited. Their PUA rider, not amazing ongoing from a flexibility standpoint, and also their lister term rider can be just confusing. It's not that it's bad or good, it's just from a confusing standpoint, and the fact that they take an anti-IBC stance puts them in the A category. But just to be clear, I see them very closely with New York Life, and so I feel like they're a package deal. So we're very much in alignment. They're going in the A, but they could very well go in the B as well. We almost need like a middle one. We'd have a lot in the middle. We'd have New York Life, Mass Mutual, both in between A and B if we were given that option. Okay, let's go One America. And One America is going to get a rating of B. They're above average. They're a smaller company, good ratings, have solid other products, like their long-term care is phenomenal. They are non-direct recognition. They also are a mutual holding company, so that's something to just take a look at. But they have great customer service. They embrace the strategy. But they're the first to say like, hey, we care more about maybe long-term conservative. We're not going to try to necessarily be super competitive. Now, I have heard that might be changing here soon. But like if you compare them to a Lafayette Life, like illustration-wise, I would say Lafayette shines in a lot of areas that maybe they don't right now, if I'm being transparent. And so that's one thing to take a look at. But and then the other thing is like if you're going, again, I say the same thing about some of these other companies. If you're going to say, hey, we're not as competitive, that's great. You can say that if you're New York Life, or you can say that if you're Northwestern Mutual, like, hey, you're not as competitive, but you're big. So like you got me good there. But if it's not as competitive when it comes, like they have flexibility with PUA, but I don't think it's as flexible as maybe some of the other companies, and they're not as big. So you kind of like give me something, and when you don't give me either one of those two, then I'm going to put you in B category because you're still a great company. And back before they made some changes, they would be in the A category easily. But then they made some changes, and to be fair, like they made those changes because they want to be historically correct. And so there's nothing wrong with it, but going forward, it just is like, okay, it makes them less, it makes them less competitive maybe on paper in some areas, even though they're a really, really solid company. So that's where I would give them a B rating.
Yep, I would agree with you. And they don't disclose their dividend as well, which to me is not necessarily a red flag, but it's just not something that I like, knowing that every other company that I know of that's in the IBC space like discloses that. And I'm not a huge fan of being like, well, whatever your dividend rate is, that's essentially like your growth rate, or like that's not true. But I do think that there is some transparency around that I wish they did disclose. Their product, I always say this anytime I'm talking about One America, they're actually good at everything, but they're not superior or excellent at anything. And so all the carriers above them are excellent or superior in something else that they're not, which puts them in the B category. And they also are very IBC focused, like Security Mutual, et cetera. I think Ameritas, Security Mutual, One America, and I think Lafayette Life as well. But Lafayette Life, to know their credit, even though they're very IBC focused, they have some very attractive things about them, like in the way they market it, very attractive things about them that just make just their product generally like very solid. And I'm not saying if you're an IBC advocate of like, oh, we want that business, it makes you in a B tier, by no means. It's just ironic that the same companies that are all very IBC focused kind of have a product that puts them in the B tier category. So with all that being said, I think you put them in a good place. I think One America belongs there.
I think another observation that we can make is if your main thing is infinite banking, that's great, but it also can almost pull you down a little bit because you're all in on one thing. So for example, like loans are a really, really good thing, but if all your clients are taking loans from an insurance company standpoint, they have to start hedging, increasing the loan rate or like changing some certain things up. You almost like, if you can work with a company that, embraces it, like great best case scenario, but then not everyone does it, you kind of get the best of both worlds. So that's another thing that I'm just noticing is Ameritas, Security Mutual, and One America very much get a lot of their business. Although One America might be a little different because they have a lot of long-term care business. They also have a career side where they do a lot of just traditional whole life. So they are, I would say, maybe a little bit more diversified from like incoming business, which is, I think, important when you're looking at an insurance company.
Nice.
Okay. Prudential is they demutualized in 2021, and they don't have a very competitive whole life product. And so for that reason, I would put them actually in the D tier when it comes to infinite banking. Some people could argue with me and say they deserve to be in the C tier along with Mutual of Omaha, Pac Life, John Hancock, Allianz, but I would put them in the D tier as it relates to this prompt.
Yeah, if you would ask me first, I probably would have said C, but I don't have a dog in the fight to be like otherwise, so we could leave him there.
Okay. So I'm just reading up on some of my notes here. We could let's put Prudential in the C tier because I think they compare very well with Mutual of Omaha, and so I think just to be consistent. All right.
They feel slightly better than Progressive.
Yeah. If it was Prudential or Progressive, I'm choosing Prudential all day long. Okay. Let's talk about Northwestern Mutual, which is a very interesting company for us to throw in the mix here. Very curious to hear your thoughts.
Yeah, it's super fascinating because Northwestern Mutual is one of the quote unquote big dogs, the big four mutual carriers. They are the largest by sheer dividend by far. And so that's kind of their claim to fame, is that they are the best because they provide the largest. And so at first glance, you would think that they should belong in the S tier. And I would say from just a sheer insurance company, like if you just took everything out of the picture and like strategy and like intent and goals, like you could definitely argue that Northwestern is probably an S tier company just because of like how large they are and like how they've been around for a long time and some of those other things that go into it. But for this exercise, and when we're looking at specifically whole life, for cash value, for borrowing against, for infinite banking or other asset producing activity, I will put them in the B category. And the reason why I put them in the B category is every time I talk to a Northwestern Mutual advisor that designs this stuff, they have no idea what I'm talking about. Even if they've been around for 5+ years, I'm like, hey, like, do you guys have like the PUAs, the base ratios, like how you design it? And they're like, what are you talking about? Like, we just kind of go in the system, like we hit a little bit of this and like, it makes it like some more cash value. I'm like, okay, like you actually don't know much about the product as a whole. So therefore you kind of design it for a blanket statement. And because it's very blanket statement-esque, majority of the people, they get that esque policy because they are captive. And so they're a way where everybody is writing with Northwestern Mutual, and like they're not going, they have the option to write with other carriers, but nobody ever does. So they only write with Northwestern because they're incentivized to write with majority of them, and their uplines are teaching them to write with them. And so they're not giving you a very good policy when it comes to that specific focus. And on top of that, they actually dock their advisors if their clients take loans in the very first year as well. So the way that it's designed and incentivized actually creates a not a great policy for cash value infinite banking, that style as well. So, but they have a great whole life just in general. I just, when you're looking at sheer death benefit, just planning purposes, etc. So because of that, like, I don't think that they should go into the C category with a company like John Hancock, but I don't believe that they belong in a category to compete with Lafayette Life or Penn Mutual, Guardian, etc. So
Yeah, I put them in B category because I would struggle, even though Northwestern Mutual is a really, really financially strong company, which is not the prompt. They're solid. They're one of the most solid companies as they come when it comes to a whole life mutual carrier. But I personally would go to a one America and Ameritas for sure, and I would have policies designed there before I had Northwestern Mutual for all the points that you made. And then also, like, they're just clear that they're not trying to get this type of business. And I've seen my fair share of Northwestern Mutual policies, and I mean, I can't remember the last time that I was like impressed. I was like, wow, like this company is really, really solid, but I've never seen an illustration that's made me be like, dang, like this is like really interesting as it relates to this strategy. So yeah, Northwestern Mutual, they're very interesting to me because they're massive. They have one of the most successful career sides of the business, and that's fascinating. I don't necessarily think they love the strategy of infinite banking. I don't think they would let their people necessarily promote or talk about this, but they're super solid. So I'll put them in the B category. I think they're S tier when it comes to like the top 4 mutual carriers. But when it comes to IBC, I would almost put them a little bit below the B tier. And so that kind of evens them out at B when it comes to that. So when you look at the list, what observations are you making, Dom, just off of this whole thing?
Yeah, I almost wish there was 0.5s in a couple categories. And the two that I'm thinking of specifically is I do wish that Lafayette Life could go slightly above some of the, like maybe the A, but slightly below the S, just because like I think that they are better specifically designed for something like what we're talking about. But I don't think that they're in the same category as maybe the other ones that we put in the S tier. And then I do think that something like a New York Life should be slightly below, like they're not equal with the Mass Mutual, but they are better than a Northwestern Mutual. And so like it makes it very difficult because I think you said it best, is like you've seen lots of policies. I've never seen a great Northwestern policy like this is great. I have seen great Forrester policies. I have seen great New York Life policies. Besides the functionality, the PUA riders, et cetera, I'm like, oh, this is a really well-designed, quote-unquote, infinite banking policy. But long story short, as we look at the list, I said it in the beginning or in the middle of the podcast as well, is that there's a clear pattern in regards to where we were ranking them. And it's actually fascinating that that's the case, is like they have a lot of the same characteristics across the board in the tier that they're in.
It would be interesting, and I think with AI we could probably do this, is almost create like a calculator, and if you go into like what do you value most, PUA flexibility, loan rates, financial ratings, all the, and you spit it, you like say like what you care about most, and then it would give you the top carriers to look at, because Ameritas has a really, really strong loan feature that for some people that could be like a deal breaker, putting them in the S tier. And you know, and if financial ratings are the only thing that matters, or size is the only thing that matters, Penn Mutual is not gonna win those awards, because they're not gonna compete with Northwestern or New York Life when it comes to size. And so I think it's like if you figure out the things that you value, boom, there's certain carriers that will go higher or lower. And then I do think the company embracing the strategy and your agent's relationship with the company does matter. So, you know, if someone has a really, really good relationship with Security Mutual and they're just contracted with Guardian, there's a world where they might be able to get you a better health rating or better exception. Like those stuff matter because they have that relationship. And so what's better, a standard rating with a Mass Mutual or super preferred with a Security Mutual? Like those are the kind of things that are tricky in a video like this. But hopefully we we did our best to be as fair and balanced as possible and to be as objective as possible. But we would love to hear from you. And also, if you want to push back, like, this is what our channel is about. And if you want to come on and share your case, we'll be doing more content, Dom, about bringing on people from insurance companies and having them share. Obviously know that they're going to be biased, but that's okay. Like, we need to have a platform for people to share different things and ideas. And I'm grateful for the future content that you're going to see on this channel. So definitely subscribe. If you're watching this, or if you've gone through our whole series and you don't have a life insurance policy yet and you want one, or you're interested in, like, does this make sense? We got links down in the pinned comment in the description where you can talk to someone on our team. If you have a policy that you want us to review for you, we'd be more than happy to do that. You can also do a policy review down below. But Dom, any final words before we land this plane? We're almost at an hour of this. So it's a good thing we don't have Q&A. Next episode we'll do Q&A. But yeah.
No, I think you said it well to end it. I think another good CTA for everybody watching is we do also have an IBC guidebook that we just spent a ton of time and energy into. Big shout out to our head of media in Alden, who is one of our sophisticated advisors on the team. Go ahead, click the link, opt into it, and you'll get, like, I don't remember the exact amount, but it's 10 plus carriers or close to 10 of, like, super in-depth ratings, financial, PUA, like everything you could possibly know about those carriers. And I think it'll be really good education for you as well to add on top of what we're talking about. So with all that being said, you guys have a great rest of your day, and until next time.